Hello and welcome to the Crypto Night Show, where we bring you the most exclusive news in the world of finance. Here's what's happening. Number 1. Tokenization of real-world assets, a key driver of digital asset adoption. Bank of America. Bank of America, BAC, has recently released a research report indicating that the tokenized gold market exceeded $1 billion in value last month. This development underscores the rapid pace of the tokenization of real-world assets. Tokenization refers to the process of putting ownership of tangible assets, such as precious metals, on the blockchain. This practice offers the convenience of buying and selling assets 24/7 without the need for traditional brokers. According to Bank of America, the tokenization of real-world assets, including commodities, currencies, and equities, is a key driver of digital asset adoption. Prior to the introduction of tokenized gold, investors who wanted to tap into the gold market could do so by buying exchange-traded funds, ETF, and futures. Investors could also buy physical gold from dealers, but these investment vehicles come with drawbacks related to cost and liquidity. Tokenized gold, on the other hand, offers several benefits. It provides exposure to physical gold without the drawbacks of management fees and storage or insurance costs. Moreover, the low minimum investment required increases accessibility, while fractionalization enables the transfer of physical gold ownership and value that was not previously possible. Tokenizing the precious metal could also increase liquidity and enable investors to rebalance portfolios quickly and efficiently. Additionally, the tokenization of the gold supply chain could benefit ESG-focused investors by providing tangible proof that gold came from a specific mine or region. This development could pave the way for more environmentally friendly and socially responsible practices in the gold mining industry. Overall, Bank of America's research report highlights how tokenization is changing the way investors approach traditional assets, such as gold. The convenience and accessibility of tokenized assets could significantly impact how investors diversify and manage their portfolios. As more assets continue to be tokenized, the adoption of digital assets is expected to accelerate further. Number 2. Bitcoin surge. Bank of America anticipates sustained rally. Bitcoin's impressive rally in 2021 is predicted to continue, according to Bank of America strategists Alkesh Shah and Andrew Moss. The forecast is based on the recent flow of funds between crypto exchanges and personal digital wallets. In the week leading up to April 4th, a net total of $368 million in Bitcoin was transferred to personal wallets, marking the year's second-largest net Bitcoin outflow from crypto exchanges. Shah and Moss believe that this trend suggests a decrease in sell pressure as investors typically move tokens from exchange wallets to personal wallets when they plan to hold or HODL them. Bitcoin has experienced strong price appreciation in recent months, with a 70% increase in the past quarter and a 43% increase in the last month alone. The surge above $30,000 has not been driven by institutional investors, according to prominent cryptocurrency investor Mike Novogratz. John Bollinger, the creator of Bollinger Bands and a well-known technical analyst, also weighed in on the matter, suggesting that Bitcoin is on the verge of experiencing a squeeze. This sentiment was echoed by renowned trader Peter Brandt, who, in light of Bitcoin's rise to $29,000, took to Twitter to predict an imminent breakout for the flagship cryptocurrency. It seems that Bitcoin's bull run is far from over, with more investors showing interest in personal wallets as opposed to crypto exchanges. This trend suggests that more investors are willing to hold Bitcoin for the long term, which in turn could lead to greater price appreciation in the future. It remains to be seen how much higher Bitcoin can climb, but all signs indicate that the cryptocurrency has a bright future ahead of it. As more people become aware of its potential, we can expect to see greater adoption and mainstream acceptance of Bitcoin as a legitimate store of value and investment option. Number 3. Ripple launches Liquidity Hub for businesses to bridge the crypto liquidity gap. Fintech company Ripple has launched a new liquidity solution to bridge the gap between cryptocurrencies and fiat currency. The Ripple Liquidity Hub offers access to payout rails worldwide and has been developed from an enterprise point of view to provide digital assets from various market makers, including cryptocurrency exchanges and over-the-counter trading desks. Interestingly, there is no mention of XRP, the crypto token issued by Ripple. XRP has been central to most liquidity products and services the fintech firm offers, especially cross-border liquidity services. However, it was mentioned among digital assets in the company's pilot phase. This omission could be due to Ripple's ongoing court battle in the U.S. with the Securities and Exchange Commission. The new liquidity solution aims to reduce the cost of operations on high-volume transactions, optimize cryptocurrency pricing and liquidity across asset pairs, and eliminate the need to pre-finance capital positions to source liquidity or conduct transactions. It also aims to reduce complicated multi-platform administration requirements by enabling organizations to access digital assets in a single place and lock in optimum pricing for digital assets to protect companies from market instability and price swings. Ripple has become a well-known name in the fintech world for offering various liquidity solutions in cross-border remittance services. Its popular cross-border payment service called On-Demand Liquidity, ODL, has onboarded several banks worldwide to provide cheap remittance services with the help of cryptocurrencies. The new Ripple Liquidity Hub is a standalone solution in addition to ODL, making it a global liquidity network offering its partners access to payout rails worldwide. It is expected to help businesses reduce costs and streamline operations while accessing digital assets. Number 4. Twitter partners with eToro to let users trade stocks and crypto as Musk pushes the app into finance. The social media platform Twitter has partnered with eToro, a social trading company, to allow its users to access stocks, cryptocurrencies, and other financial assets. A new feature will roll out on Thursday, allowing users to view market charts and trade stocks and other assets from eToro. Currently, Twitter's hashtags feature enables users to view real-time trading data from TradingView on index funds like the S&P 500 and shares of some companies such as Tesla. With the eToro partnership, Twitter hashtags will expand to cover far more instruments and asset classes. The partnership marks a rare and noteworthy business deal for Twitter since Elon Musk took the reins as CEO after buying the platform for $44 billion last year. Founded in Israel in 2007, eToro is an online brokerage that lets users buy and sell stocks, cryptocurrencies, and index funds. Among its most popular features is a function that allows people to mimic the trading strategies of other users. The company has more than 32 million registered users across Europe, Asia, and the United States. According to Yoni Assia, eToro's CEO, we've seen more and more of our users interact on Twitter and educate themselves about the markets. We believe this partnership will enable us to reach those new audiences and connect better the brands of Twitter and eToro. Musk has reduced Twitter's staffing sharply, taking its headcount down from 8,000 to 1,500 when he took over to reduce costs and reach profitability. His actions have spooked advertisers, with many brands leaving the platform due to concerns that its content moderation standards would slip. However, on Wednesday, Musk announced that almost all advertisers had returned to the app. Despite this, Stellantis and Volkswagen do not plan to resume advertising on the platform yet.